welcome back everybody to the Bitcoin Business Bureau. I'm your host as always, LitecoinLeader. This is gonna be a quick intro because it's a long video. I just wanted to get back in the swing of things after being away for a couple of weeks and share the first video here of my talk when I was at Utah Valley University. It's about an hour long. It covers a lot of different things, runs the gamut, security, trading, borrowing, well, not trading, but it's not financial advice for sure. We'll start there. But it covers security, Bitcoin, blockchain, altcoins, the technology, why miners are. Basically, the course was called Bitcoin and Intro to Cryptos. The room was packed. It was a lot of fun. I had a lot of fun at the event, and then I went on to several more states, which took a while for me to get back. So enjoy the video. Let me know your feedback on it. Hopefully the audio is boosted enough so that everybody can hear everything. And I did have to, I talk about my business card, which I flipped the script on a lot. I can't really talk about that, I don't believe, on YouTube. So that's going to be on my Patreon site. So be sure to go to LitecoinLeader, all one word, for Patreon. The link's going to be below. But in the meantime, please enjoy the video, and I will see you soon with some more videos. At the top of who I am, so I can identify myself, so you know where I'm coming from. My name is JeffPinnacle. I'm also known as LitecoinLeader. Thank you very much. I appreciate that. I'm known as LitecoinLeader. That's my website, LitecoinLeader.com. LitecoinLeader.io will take you to my free YouTube. I'm also on Instagram and Telegram at LitecoinLeader. So pretty much my contact stuff is on the card. But the reason I gave out the cards to everyone is that it's actually worth $40, and I'm going to explain that today. But I'm going to get to that in a minute. So basically, I'm going to pay for the ticket that you just had here today. But first, I'm going to talk about a couple things I wanted to talk about: Bitcoin and blockchain and the differences between the two, and altcoins and what they are. And welcome. Thank you. Put these cards over here. Make sure everybody. Get this later. You go, sir. We'll come back to that. So we'll cover Bitcoin and blockchain, the difference between the two, and altcoins, and what their purpose is, and some major altcoins, and what else did I have in my notes? And it's going to be pretty much free form. The reason, okay, so let's just start. So who knows the difference between Bitcoin and blockchain? Do you understand that there's a difference between the two? Okay. How many people have an iPhone or an Android smartphone? Okay. You have an operating system on your phone.
Yes.
Okay. That is analogous to blockchain. You download apps onto your phone.
Right.
Bitcoin is analogous to an app. The phone can operate without that app, but the app can't operate without the operating system. Bitcoin can't work without blockchain, but blockchain can work without Bitcoin. Okay? Does that make sense?
Yeah.
Yeah.
So it's kind of like, like a set theory thing. So blockchain is the technology. Please grab a card when you come in. Thank you very much. Welcome. So Bitcoin is the first killer app on blockchain technology. All blockchain is data blocks. Where did my marker? There we go. One marker. So all you're doing is you're writing data. Pull down a little bit. So it's data blocks. There's data in this block, in a block, and every so often there's another data block. And they're chained together. This is a chain.
Right.
And it's just a chain of data on and on and on and on. This is the blockchain. What's in the blocks and how these blocks are created is the technology. And the blockchain is the technology. Bitcoin is the application of this technology to make it into a currency or a monetary system. Now, blockchains can be used for other things. It can be used for voting, ID, records of any kind. Basically, anything you write information down on, any data record. That's what blockchain is. Okay? And if you have questions along the way, feel free to interject and ask. So Bitcoin has been around for 12 years now, started in 2009. And the name that is associated is Satoshi Nakamoto. That's not really important, but he wrote a white paper that basically said that the internet needs money, and the system can be used as a currency on the internet, because we've solved the problem of the internet's not fast enough so that we can prove that when I send money to Nathaniel, when I send money to Nathaniel, I send money to Jen, I'm not sending the same Bitcoin at the same time. They have to validate that. Okay, I'm sending one to Nathaniel, I'm sending one to Jen. Am I double spending? Am I sending, do I only have one Bitcoin to send? I can't send one to him and I can't send one to her if I only have one. So that's the double check. That's the problem that it's solved. And that's what all the miners do. So Bitcoin miners are just computers. They're running all over the globe. That's the part of the decentralized nature of it.
Right.
And they're just, they write down this blockchain. So their job is to confirm that the transaction is good.
Mm-hmm.
That's their only purpose. And if somebody tries to game the system, one of the computers will flag it, and they'll say, no, we would reject that. But the other ones, like to say there's 100, 99 will say, that's good, that one's bad, we reject it, you need to catch up and get a new copy of the blockchain. That's how the technology works. So it's kind of, it's self-checking, self-correcting, and then the miners get rewarded for a proof of work system. That's what Bitcoin started, as a proof of work, because these miners are working. They're running, that's the electricity that they talk about, which is another story, we can talk about that if you want, but it's not true that they're using too much energy. But they're working to make the next block. And every time there's another block that's written, the first one that gets, there's a math problem. All the computers are trying to solve a math problem every 10 minutes or so. And the first one to get an answer that's acceptable, and everybody agrees that, yeah, that's a good answer, they get to write the next block. And they get rewarded with some Bitcoin. Mm-hmm. That's how the system works. So that's the purpose of miners are incentivized to get more Bitcoin and run these programs because they're going to get more Bitcoin. That's what mining farms are all about. You have a question?
What happens if all the computers went down globally? What happens?
Okay, that's a good question. So what happens if all the computers go down all at once?
Sure.
The system is so resilient now because it's so mature now. There are miners running in mountains, and there's also running in satellites in space. So as long as there's always one copy going,
Yeah.
you're fine.
Yeah.
Because that's that fear. You're like, oh, I
Sure.
just lost everything on my computer.
Right. And I noticed a couple of people came in late. Make sure you get a business card before you leave because it's worth $40, and I'll explain that in a couple of minutes. So that's the technology, and that's what Bitcoin's about. But what I want to and let me talk about the cards, so we can get that away so everybody's like, I want to teach everybody how to get Bitcoin, how to move Bitcoin, and how to make money with Bitcoin right away. So if you flip over the card, you'll see 3 QR codes. And if you don't have one, just come down, there's a couple right on this table. So there's 3 QR codes. The first one says Cash App. I can't give financial advice. I'm not legally allowed to do that, but I can say I can add value. So I want to add value to you by giving you a path to $40 to pay for your ticket today. So if you scan the first QR code, it will open up a link to Cash App. And you can link your bank to it and buy Bitcoin right away. It'll give you $5. So I would recommend, not financial advice, but the recommendation would be $100, and I'll explain why in the next QR code. So if you take $100 and buy Bitcoin, you get $5 free. I've given you $5 now. Now you take that Bitcoin and you move it over to, you scan the second code.
Sure.
That's Nexo. So Nexo is a platform where you can borrow against your coin, and you can also swap them too, and it's secure, it's safe, it's insured. So you can move your Bitcoin over here. By putting $100 in this account, in 30 days, you get $10. So now you have $15. Now, I promised you 40, where did the other 25 come from? Well, I'm glad I have a whiteboard. Where did that marker? That marker is just so elusive.
Is Cash App like Coinbase?
Cash App is an app. It is better than Coinbase because Coinbase has issues, and we can talk about those.
Yeah.
Yeah, this is going to be, whatever your questions are, please share them with me. But it's kind of, well, I'll go over here. Okay, so when you put in, I'm going to use Nexo as an example. That's the one I prefer. That you can choose. There are other ones like Celsius and a few others. But you take Nexo and if you deposit $100 in Bitcoin, right? You deposit $100 in there. They will give you a 50% credit line immediately. So that will be $50. Your $50 credit line. Not financial advice, but you can borrow half of that. There's that magic $25, and turn that into more Bitcoin. So now you have $125 of Bitcoin, but you also have a $25 loan in dollars. Now, how many people would rather have Bitcoin versus dollars? How many people want Bitcoin?
Yeah.
Okay. And we understand why, right? The value proposition. I'll explain that in a minute. We just heard yesterday, I was on the plane, I didn't hear about it until like when Lisa just told me, but $3.2 trillion that they're printing more of. They have, the numbers keep getting skewed and it's hard for me to keep up with them, as you can imagine, but in the last year and a half or so, more dollars have been created than have ever existed before that time.
Correct.
So they've doubled the money supply. So simple, and if you come to a university like this, the first thing they teach you in Economics 101, supply and demand. If the supply of currency goes up, then clearly the price must go up. Because if there's a fixed number of things, like if you have 21 million things, and you say you have $21 trillion, then you know that this should be whatever that math is. I think that's about 1,000. Maybe, yeah, okay. No, it's 100,000. It's be a million. So yeah, a million is a trillion, if I'm not mistaken. But anyway, but if I double this, if all of a sudden I double this to 42 trillion, all of a sudden I print more dollars, but I haven't changed this, then the price of this must double.
Yes.
So that's where we're heading, and that's why people are so interested in getting Bitcoin, and that's why many of you are here today. So that's the problem. That's Michael Saylor is one person that I follow, and he explains it in a very nice way. It's like if you go back to the 1800s and buy an acre of land in Manhattan, would you do it?
Yes.
Would you ever sell it?
No.
That's why you learn about things like Nexo. Bitcoin is an acre of land in modern Manhattan. There's only ever going to be 21 million of them. Does everyone understand why?
No.
Okay. So there's only ever going to be 21 million because the laws of Bitcoin is the code that it's written in. That's what the miners run. So the code says there's only ever going to be 21 million, and it started that they gave away 50 Bitcoin every 10 minutes for one of these blocks.
Right.
But then there's an event called the halvening or halving, however you pronounce it.
Sure.
Every 4 years, this number gets cut. So this number drops to 25, 12 and a half, and I think we're at 6.25 now, because it's happened 3 times. So that's why, if you look at the supply of Bitcoin, it kind of looks like this. It tapers off over time, and this is a line of 21 million. So in the year 2140, I believe, there's no more Bitcoin made. So this is the inflation rate, which is less than any inflation rate of any currency that's out there, clearly, today. And so the supply is getting cut of Bitcoin every 4 years. That's another reason that the price keeps going up. So this is and the code is written this way that it can't be changed. The only people that are allowed to change the code of Bitcoin are the miners. You have a question?
Well, humans in all history of the world, they always corrupt the money. So what's going to stop them from making more Bitcoin?
I was just about to answer this. That's a great question. So the only people that are allowed to change, anyone can propose a change to Bitcoin. It's called a Bitcoin Improvement Proposal, or BIP. In fact, there have been some good ones. There have been some bad ones. But if I go and propose, like, hey, I want to change this number to 42 million. Guess who gets to vote on it? The miners. They're the only ones that are allowed to vote on it. Would they want to change the supply, considering that they're getting rewarded for this? No, they have no incentive for that. They would dilute their rewards. So they would never vote for a proposal like that. So therefore, there will only ever be 21 million. That make sense?
Okay. What happens when those miners die?
One more time, I'm sorry?
What happens when those miners die?
When those miners die, you mean the computers?
I guess not.
The computers can die. Computers don't last forever. Every hard disk is designed to fail. It's mechanical in some way. Computers always die. Laptops, cell phones, they just die.
Yeah.
But the code, somebody's like running. There's always new miners. There's always new Bitcoin miners that are out there. So they're always constantly running.
So the miners are computers.
not people.
Yes, yes. I'm gonna hand out cards to you guys. Please take a card back here. And for those who came in late, I'll explain what the back of the card is at the end if you missed it. So yes, computers always die, cell phones always die, hard disks always die, but somebody's still running the code. So you just upgrade it. You just upgrade your miners, and that's actually why mining farms. There's a term. It's a little complicated, but it's called the hash rate, and that's a phrase that you probably don't really need to know about. But if you hear it come up now and then, that's really of how many computers are running and how fast they can operate. And the reason that's important is it tells you how strong the network is. So the bigger this number gets, the more computers running that are mining. So every 2 weeks for Bitcoin, they change the difficulty of that math problem I mentioned earlier that you have to get the answer to get the reward. They change the difficulty of it. The code does this already. It's in the code. They change the difficulty based on the hash rate to kind of make it say every 10 minutes or so there should be an answer. That's how it works out. So if I add a ton more computers working on the problem, you would think you'd get the answer faster. Well, in 2 weeks, that would self-correct. Now, there were other coins that changed that. Because China just banned, again, Bitcoin, and there were some miners going offline. What they were doing, they were moving those miners to another place.
Okay.
So,
that does concern me.
Yes.
So those people that are in China, and do they still have access to their computers because they've just been banned, and how?
so most of mining it used to be back in the day, like before we had all these big mining farms, that you could mine on your own, on your personal computers. Now it's just so sophisticated, as you might see later on today with the miners. They're like little box computers, like they're rigs specially designed to go as fast as they can to get these answers as fast as possible. So those miners, they may go offline, but it's not personal computers. What they do is they take those miners, they're called rigs. It's like a little box, like a shoebox size. They'll take those rigs and they'll move them to a more favorable location. Part of the nature of this is that there's a certain cost of mining. There's the cost of electricity, and there's the cost of the equipment. That's the two main costs. And also cooling. There's three things. So when you run a computer, the room can get hot. If you've ever been in a room full of servers, there's a lot of heat generated by computers. So that's a concern. There's the cost of the hardware, the cost of the cooling, and the cost of electricity. Those three things are like the lifeblood of miners. They will always gravitate to where those three things are best favorable. They'll find a better way to cool their system. They'll find a cheaper electricity, or they'll find better computers. And the computer is, you might spend more for the computer rig, but it might give you more computing power, so it might be worth it to spend up and get the latest and greatest miner. So,
Is mining the best efficient way for investing in Bitcoin?
Presently, no, and there's a couple reasons why. So Bitcoin used to be that was the best way, and I actually have a few friends that used to mine. Pardon me. So they used to mine, but they're getting out of that business because of the competition. And the competition really is the top computer product right now for mining. It comes from a company called Bitmain, which is in China. So what's happening, it's hard to get those rigs. So that may change in the future, but the top rigs come from a company called Bitmain, and they allegedly sell them brand new to people, but really what's happened is that Bitmain moves them to an area called their test network, and they run them for 6 months. So they're mining for 6 months, and they say, okay, they're good, and they can sell them somewhere else. They run the latest and greatest miners for 6 months, and then they sell them as new to everywhere else in the world. So it's very slanted towards the big conglomerate mining farms, and because of what Bitmain does, and that's the #1 mining computer, it's kind of biased against mining. They're still profitable if you can get certain areas, yes, but you really have to have the right economics and know your cooling, know your costs, all that well, and it's tough. It's a lot of capital investment to get to a critical mass. So really the better way is to look at altcoins, which is a good transition. Any more questions on Bitcoin before I start to transition to altcoins?
Yeah, what if someone did like a 51% hash attack on the network, let's say a pool of miners in China or wherever, I know they just moved their stuff. But is that possible, or is it too decentralized with Bitcoin?
It's an excellent question, and first let me explain the 51% attack to other people so they can catch up. So a 51% attack is, there's computers all over running the miner. If I get control of 51% of them, I have full ability to do whatever I want. I can take all the Bitcoin, I can change everything. That can only happen if I can get 51% of them. The hash rate of Bitcoin is so high, there are so many miners, it would be virtually impossible for that to happen right now. It would cost billions and billions of dollars to get critical mass to get and take over and do what they call a 51% attack. So I think the cost of Bitcoin right now is, I'll put it at 50 grand right now, and let's call it 50. If Bitcoin is 50,000, there's 20 million of them. That's essentially $1 trillion enterprise. So imagine getting $500 billion to try and change it. And then once people identify that someone's doing an attack, they will divert and they'll shut that down. And so you'll have spent $500 billion to maybe hack 2 blocks and then they'll fix it. So it's not profitable. Now there are other projects that are smaller that are not at that decentralized scale yet. So that's why a lot of projects, when they're starting out, they want to encourage decentralization, because it's one thing if I have 1,000 miners, but if they're all on this campus, I'm not decentralized. They need to be spread around, because if the power gets shut down on this campus, the network's entirely down 100%. Right. But if I have them in 50 different states or in 50 different countries, I'm much more decentralized, much less susceptible to a 51% attack. Yeah. So that's why projects promote in various different ways decentralization. And there are projects that, the preferable way to go right now is sometimes there are projects that use a system called let's start with proof of, so Bitcoin is proof of work. Okay, miners are running, they're working, they're constantly running to make the next block. They're working. Yeah. Then comes proof of stake, where you take coins and pledge them to the network. So let's say I had 1 Bitcoin. I said, Bitcoin, I will. Yeah, you're having a conversation with a computer, but you say, I will pledge to the network a certain number of coins for a certain amount of time. That I won't move them to help strengthen the network. I will create a node. So if I have, I'll draw the US real quick. If I have, if I'm all here, no good. But if I create nodes everywhere around the country, by saying, when you stake coins, you create a node. You're strengthening the network, because all the networks connects all these dots in many different ways. I've got all this network across the country. I mean, decentralized network. I only drew the US because I'm not drawing the globe right now. But you get the idea. You can be all over the different countries. And the encouragement here of the network is like you want to encourage staking. So the way you encourage staking, because staking creates these nodes. The way you encourage staking is by saying, if you enter a smart contract with the network, I will give you extra coins. So you get a reward and the network gets stronger. So it's a win-win for everybody. So there are projects that create staking or master nodes. You will hear those terms in other projects like Cardano, Polkadot, Divi, that you'll hear mentioned. I see lots of questions. Let's start right there.
Well, this is not a dumb question.
There are no dumb questions.
Essentially, the miners are getting the new Bitcoin, and then are they just, as they're mining, they're just selling it to anyone around the world, and that's why they mine? Or why don't they just keep the Bitcoin for themselves?
So originally they had operating costs, because there's that capital cost up in front. They cost to operate their system. It could be $1 million or more to run a facility for electricity costs, cooling, even after you bought the equipment. So you have to pay for that overhead. That's why they would sell Bitcoin. And that was the number 1 supplier of Bitcoin, was miners. Now that we have the ability to borrow against Bitcoin, that's changing everything. So now miners don't want to sell; they want to keep their assets, much like owning an acre of land in Manhattan. And if you own a house, you don't want to sell your house if you need money. You want to borrow against it. I want to keep my house, but I'll take out a bigger loan because I want more capital to work with. So the miners are doing the same thing. They have their Bitcoin that they've mined. They're like, this is going to go up. That's why we do this. I'm going to borrow against it, use that for my operating costs, and pay it off in dirty fiat that is, we know they're printing more of. It's going to be worse. It'd be worth less in the future. So I would much rather have a loan in fiat and have my Bitcoin still in place. Yeah. So now the supply of Bitcoin is dropping because all the miners are not selling anymore, because they can borrow against it rather than sell. Does that answer your question? Okay. All right.
Yeah.
Yes, sir.
Do you think Bitcoin will move to proof of stake?
I don't believe it will, because that would be a major endeavor. And also, let me explain that in a different way. So there's a project right now. Does anybody know the number 2 project in the world that is the number 2 coin? Ethereum. Okay. Their talk of Ethereum 2.0, and this is abbreviated by ETH. That's the symbol for Ethereum. So Ethereum's, let me start by explaining what an altcoin is. An altcoin is a coin that's not Bitcoin. Right. Okay, that's the basic answer. So, does anybody have any idea how many there are? I didn't even look this morning.
6,000.
8,000. 12.
So I started my YouTube channel. I started my YouTube channel on April 1st. I remember this date. People were begging me to start. I finally started April 1st. There were less than 9,000. There was about 8,200. There's over 12 to 13,000 right now, I think. And the reason that there's so many is because there's now more platforms, which I'll speak about in a minute. I want to make sure I hit on all my topics, but I'm going to answer your question by talking about the number 2 project, which the number 1 altcoin is Ethereum. Their claim to fame, they started about 2014, some give or take a year. Their claim to fame is that they created something called smart contracts. And they also became a platform, those 2 things. So smart contracts is just a digital contract. Imagine if let's sell a house. Like I'm going to sell my house to Nathaniel. I like using you right in front. So Nathaniel has a house, and I want to buy it for $1 million. Right now, we have to go to a title company to settle up, and we've agreed that's going to be $1 million transaction. But we need a third party to do all the paperwork, make sure everybody's good. But if we did a smart contract, and he said, if Jeff gives him $1 million, he'll give me the house. We put the deed in the smart contract, maybe via an NFT, which we can talk about too. We could do all that with the title company because we've agreed that that's how it's going to be. Once he agrees the contract is good, and then I put the money there, we both say, yes, that's good. I get the deed, he gets the money automatically through the contract. It's settled. We're done. Title companies hate this, but that's the way we're going. Every middleman that exists is going to go away through smart contracts.
What's to stop that? What's to stop that? Lawyers and titles to get involved.
They can, but you can't litigate against a decentralized system that's not. The governance of this is the code. It's beyond the borders of any country. This is borderless.
So they can never centralize this. Anyway.
They can attempt to. They can make us. They can make it so. Well, they can propose networks. They can propose that. But let me get back to that in a minute. I want to get back to answering your question. So Ethereum's trying to move from proof of work to proof of stake. They originally had a whole bunch of miners that were mining Ethereum, and now they're trying to get a proof of stake. So there's a couple things that happens. First off, you're going to take off the miners. The miners were making money. They invested money to make money by supporting the network. So what happens to them when they go from proof of work to proof of stake? There's no clear answer to that yet. So that's an issue, and they keep pushing out the date for proof of stake. So it's a very difficult transition. Many have said that you really need another coin to do that, or a copy of the network to move that way. But Ethereum they just had an upgrade in the London fork happened a few months ago, where they changed the tokenomics, which we can talk about too. It's a deeper conversation, but basically it's very difficult to go from proof of work to proof of stake because now you've taken everybody that supported the network. Every miner was working to say, I will make Ethereum stronger, and you can reward me by giving me more Ethereum as I mine. And saying, well, we want to go to proof of stake, which means the miners are going to get maybe 0 rewards going forward. Well, what happens during the transition from here to here? It's not clear. Because at some point, there's going to be instability in the network because all the miners are going to say, I forget this, I'm not making any money. I'm going to go to Ravencoin, or I'll go to Ethereum Classic, or something else, where I am getting rewards because I have this infrastructure to mine something. I need to go mine something. So you're going to take away from the network. So it's a very difficult transition, and no one's ever successfully done it yet. And Ethereum's trying to work through it, and they're struggling with it. So we'll see how it plays out. There's people that get the point, they look at Ethereum with rose-colored glasses and say, oh, they've done so many good things. And I have all these coders working on the problem. Like thousands of coders are working on Ethereum right now to improve it. But I say, take the rose-colored glasses off and look at it with both sides. If you manage a system and you had resources, where would you deploy the most resources? Where you need the most work done? Ethereum has the most people working on it, so that means there's a lot of work to do. So they're still struggling with working this out. Also, originally the team that started Ethereum was a team of 8. 2 of the people that used to do it were Gavin Wood, who left and started Polkadot, and Charles Hoskinson, who moved and started Cardano. So excuse me. So Cardano and Polkadot are now both top 10 coins, thereabouts. And they offer smart contracts. So Ethereum offered the smart contract solution. It also offered a platform. They were a blockchain that other projects could come and say, rather than me building a new blockchain for myself and to do all these data blocks, I can adhere to their standard. Their first standard was called ERC20. So you may hear an ERC20 coin. That just means that it's a coin that's using this blockchain, the Ethereum blockchain, to run. So rather than like a coin that I'm going to try to think of, Chainlink. So Chainlink, some of you may have heard of Chainlink. Chainlink runs as an ERC20 coin. It runs on the Ethereum blockchain. It needs that operating system to exist. But now there are other coins, and I'll start to write them down.
Sound like Ravencoin?
I don't know, honestly, I don't know too much about Ravencoin.
Ravencoin's a fork of Bitcoin.
Okay.
So yeah.
So Polkadot and Cardano are two top 10 coins. Don't ask me why it's called ADA, it's a weird story. But Polkadot and Cardano are now both top 10 coins. They offer the same feature set, or better, than the original Ethereum. They offer smart contracts. They offer a platform for other people to build on. And Cardano just launched smart contracts last month. So now, Ethereum it's really a utility coin. You needed this coin to transact in ERC20 coin. You needed any coin that needed it. You needed some Ethereum to move it, or to pay for it, or to do a DeFi, or make an NFT. You needed Ethereum for it to work. You needed that to pay for like moving the coin. Every time you move a coin, the mover pays the bill. So it's a utility coin, and you have to have Ethereum. So it's not a nice to have, you need it. So if I'm moving Chainlink from my wallet to another platform, I have to spend some Ethereum to do that. So you need Ethereum. So Ethereum's needed by like DeFis, NFTs, all these other projects, and there's only so much space on Ethereum, and it's clogged up. It's like a super highway with too much traffic. It's a traffic jam. That's why the fees, you might hear like something called a gas fee. That's the fee, how much you have to spend to move that coin on a DeFi platform, or like a Uniswap, or like swapping coins from one coin to another. You have to pay all these fees. Everybody says these are too high. Well, it's because there's only so much room, and like the highest bidder gets the next block. That's how it works. So it's very difficult. Like this coin has troubles with it, but it's a necessary need in the space, because there's probably over 1,000 coins just on Ethereum. Plus there's the NFTs and the DeFi, so this is a need. But now, this need is being mitigated by other projects that they do what's called a layer 2 solution, that they'll, like, if the Ethereum blockchain is layer 1, they'll run a layer 2, and they'll aggregate all the transactions, and eventually just like gather them all together and put them on the main blockchain now and then. You gotta spread those costs out over time. So I'm touching on a lot of different things. Anybody want to, I could talk about wallets, talk about security, talk about the altcoins. We've got 30 more minutes to go.
Altcoins.
What's
Talk
it?
about
What?
NFTs a little bit too.
All right, I'll touch on, all right, so I can touch on NFTs. All
What
right.
about wallets in a wallet, a safe, steel card, Faraday bags? Do you do the whole shebang for securing your stuff?
Okay, so I can talk about security for a couple of minutes, and there are lots of different approaches to this. So again, there's a lot of people in here that are relatively new, so I just want to get to that point, and we can have sidebar conversations later on, because we're here all day. But there's a proposal, I mentioned the Bitcoin improvement proposal. There's a BIP, I think it was BIP 32. And originally, you had to keep really close track. I'm going to start really basic now. So when you have your coins, when you have a Bitcoin, you have I'm going to say a private key and a public key. Okay. A private key is something you never share. It's like more sensitive than a password. It's like a key to your safe deposit box. With that, you can always go on the blockchain and find out how much Bitcoin you have. You never share that with anyone for security reasons, because anyone with this can get access to all your funds. So you only want to use wallets that have private keys. Now, originally, that was you had to keep very close track of that. That's why a lot of people lost Bitcoin, but there's an improvement that added what called the 12 seed words. And some wallets use different numbers of seed words, but they're just like English words that people can remember, like sunset, rainbow, whatever. There's these 12 words that they give to you that you need to write down. So you write those words down in at least one place, preferably two. Put them in a safe place, a safe or whatever. You can put them on a steel plate, whatever, however you want to do it, because those words are that's called your recovery phrase as well. Your seed words are your recovery phrase. So let's say your computer died. You had a laptop that had all your Bitcoin, You had it, and all of a sudden it freaked out and it stopped running. Well, you've got your seed words. You can get a new device, get a new version of your wallet, whatever flavor wallet you like, and you put the seed words back in, and your money will repopulate based on those seed words. And it's generated from your private key. Now, the public key, okay, the public key is like all those weird, like the lengthy address that people see, like 1A, 7X, 4X, like that's your address for Bitcoin, which is impossible to remember. But your public key is generated from the private key using cryptography. That's where the cryptocurrency phrase comes from. And it's a one-way street. The private key, you can generate multiple public keys from the private key using the cryptocurrency algorithms. But you can't go backwards. At least right now, until they start rumors of quantum computing possibly going backwards, but that's long in the future. But right now, the private key is your security. Public key, you can tattoo on your forehead because it doesn't really matter because they can't steal your money with it. That's like, I have my public key. Everybody, lots of people have public keys everywhere, like donations or whatever. It's like, here's my address to send me Bitcoin. But that is a public address to send me money, and that's perfectly fine because there's no access from here to there because it's a one-way street that way. So you're safe. So there's three things you never, your wallets, you don't share your password, obviously, people know about passwords. Private key, never share, and you never share your seed words. Unless you get into a security issue, you're losing your coins or something, and if anyone's been around long enough, like I've been doing this for 5 years, everyone's lost a coin and had a horror story. It's just how it works. Some people, quite honestly, some people should not be their own bank. I have a what I call the VCR test or the daylight savings test. And we all know somebody in your life where every 6 months you get the phone call and say, how do I change the clock on my car or on this or that? Like, if you don't know how to do that, then probably you shouldn't be messing with this stuff. But the good news is that I work with a lot of different tools and lots of different organizations that you have solutions for those people.
Sure.
And that's fine. It's like if people just want to write a check and be involved in Bitcoin, or just want to use Cash App and buy it, and they don't necessarily have to move it. But if I have a retired couple and they've got lots of, like, I hear Bitcoin is good to get into. I said, well, I have solutions where you can just write a check and like a 1% management fee, like a mutual fund. Is that appealing to you? Because it's a dialogue. Everyone I talk to, their situation is unique. A 70-year-old retirement couple in Florida is not the same as a 25-year-old fresh out of college who wants to learn about Bitcoin. Not the same at all. But I don't say there's a one answer for everybody. You have to have lots of, like some people want to get involved in borrowing their assets and learn about these seed words and stuff. Some don't. Right.
This is because of my age, and I just set up everything with an attorney with me. I have an only child. How do I make sure that if I die, he has access to all my Bitcoin? I just bought a BitFi on a Bitfit thing, and I'm trying to figure out things. But how do I know how he can get to this when I'm gone?
So at some point you will have, that's an industry that's understand that this is a 12-year-old industry. That's going all the way back to the dawn of Bitcoin. It's really like 4 or 5 years old because that's when really things started to really happen. But that's a valid question that people are working on that solution. And I know that I work with a concierge service, a company called Viva Capital, where they offer these like services where you can call them and say, I want to invest, and they will set up trusts or whatever you want, and say they have attorneys on staff, they have all these different relationships because people are unique. They deal with people like I do. Like it's a different situation for everyone. But as a general answer, there's no crypto inheritance offerings as a package yet. What I would recommend if you do an estate plan, or if you have a will, if you have an attorney, and as part of your estate plan is saying, all my seed words are here, here's how to do it. Like if you have, and put it in your safe, or put it with your attorney. Or you put it in a trust and say, here's the seed words and how to get my funds.
You might want to explain custodial versus non-custodial,
Yeah.
because that makes it easier for a lot of people. You don't want to mess with the
Yeah,
complexities.
So custodial just means that who's holding your assets, but it doesn't mean that they own it. They're basically like, imagine 20 or 30 years ago having a stockbroker. Like you can call a stockbroker and they can trade Bitcoin for you. A custodian can do that. A custodian can also hold your assets. They can offer different, like the most famous one right now is Grayscale. They're a big one, but they're also not the best.
Or Coinbase.
Coinbase is a custodian, but they're also an exchange platform.
Yeah.
So they're trying to do, like labeling Coinbase as a custodian, I kind of teeter on. because I think that they're an exchange, they're a centralized exchange. They try to offer a wallet, but it's not a true wallet. I don't know if they're offering seed words for that wallet yet or not. But and they also hold your coins too long. And anytime I tell everybody that you want to avoid counterparty risk or third-party risk.
Yeah.
You want to have access to your money, you have control over your money. If you need to log into a website to see your assets, that may not. That pretty much means you don't have control of those assets, because if that website goes down, where's your money?
Right.
So a site like any centralized exchange, if your money is stored there, that's a risk.
Yes.
Coinbase can go down. They can stop you from withdrawing funds for 7 days, or limit how many Bitcoin you can take out per day. And that can happen with any centralized exchange. You have four most common exchanges in the U.S. are Coinbase, number 1. I would say Gemini is probably 2. Binance US is number 3, and Kraken would be number 4. There are others. There are others in there. Like I like Abra, but they're starting to change their policy. But Abra is also an app and also online, but they also offer seed words. So they're a legitimate wallet, but also an exchange. So they can do both. Now they just added a term last year about holding funds for 60 days for anti-money laundering. So I'm a little concerned about that. But they also allow you to borrow too against your assets. So there's lots of platforms that are trying to address what people want. They understand there's just people like Michael Saylor out there saying, never sell your Bitcoin, borrow against it. That's all well and good, but the mechanics of it are where people like me have to help everybody and say, here's how you do it. And I do it because I went to Nexo and I learned how to do it, and now I shared it with you guys. That's in the back of the card. So it's not, so if you follow those 2 QR codes in the back of the card, you will know how to buy Bitcoin, you will know how to move Bitcoin, and you will know how to borrow against it. Those are the top 3 things that people want to do, and 99% of the world don't know how to do.
I'm one of them. I've never done this, what you all they're talking about, these, take a picture of the code. I don't even know what that is, what you're talking about.
All right, well, we can talk later, but you can scan those with your phone and then our
I don't
website.
know how to do that.
But we'll get there. It's an app that you do it, so we'll get there.
Do you have more cards?
I do, absolutely.
So I want to read.
Is Nexo like MetaMask or a wallet, or is it
Pass this back, I'm sorry. Say again?
is Nexo like a wallet, like MetaMask, or is it?
Nexo is like a Celsius or a Compound. They're a company, like a BlockFi, if you've heard of BlockFi. So some companies are offering IRA custodianships. Some companies are offering platforms where you can borrow against them. The good ones that offer a lot of different coins to borrow against, good rates, good margin call numbers. Nexo I chose, I looked at BlockFi, I looked at Abra, I looked at Nexo, I looked at Celsius for borrowing against. I made a video on this too. If you go to YouTube, just email me, I can send you the video. But Nexo and Celsius were top 2 for me because they insure their coins and they give you a good variety of coins to borrow against. And you borrow 50% against Bitcoin or Ethereum. So you don't have to borrow that much. Like the more you borrow, the more you can get closer to what they call a margin call, where they might start to sell some of your coins to balance you out. But Celsius is 65%. If your loan to value gets higher than 65%, they will start to sell some of your coins to rebalance you. Nexo is 83. So that's why I opened Nexo.
And Nexus.
So I mean, if you put $10,000 of Bitcoin in, you can immediately borrow $5,000 out. And as long as your Bitcoin doesn't go up $6,000, there's no issues. At Celsius, it would be like 7,500 or so. It'd be a higher number. You'd be more worried. Questions?
If they start selling some of your coins, is that a taxable event?
I'm not a tax advisor. I can't really advise on that one. I'm not a financial answer. I'm not a financial advisor or a tax advisor. I can't advise this, but I can point you in the direction for people to ask that question.
I can't coach you.
So,
I can't advise
I don't know.
you, but
This makes sense, but I'm still learning. So, if you have coins or Coinbase or one of those platforms, and you don't really have a wallet, where do you move that? Put it in a wallet so you can continue to grow your Bitcoin and then buy your Bitcoin exchange. How do you do that?
So, going back to security, and you'll hear lots of different approaches. Like KLX is here today, and they have a laptop for security. I recommend, it's tiers of security. When you first start out and you're buying your first 1,000, 2,000, you can do it on your phone, whatever. But after you get to a certain point, you want to move it to a secure device. And I would recommend, not financial advice, but about 5% of your wealth for security purposes. So what I do, I get an unlocked cell phone, and I put a wallet on here. Now, this is and I treat this as a vault. And this isn't the one that's my vault, that's back home. But that vault never leaves my house. It only knows my Wi-Fi. And the reason I use that rather than, there are hardware devices that are out there that use this wallets as well. There's Treasure, there's Ledger, there's a few others where you can move your coins to put them in a hardware device. I caution against that because hackers look for the low-hanging fruit. I used to manage software engineers. I worked with computers a lot. When hackers write a virus, they're going to try to maximize their return. They're going to try to write a virus for the most popular hardware devices, Treasure and Ledger. So those devices have to plug into another device, like a laptop, to get on the internet and look at the blockchain and confirm assets and move them around. So that medium of getting to the internet could have something on it that would be looking for a Treasure or a Ledger. And as soon as it happens, they could suck all the coins out of it and send it somewhere and they could be gone.
So on that phone.
So let me complete the story if you don't mind. If you use a different hardware device, like a laptop, only on your Wi-Fi, and only use it to store your coins, you're more secure than a Treasure or a Ledger. But you have to invest in a laptop. I invested in an unlocked cell phone, where I put wallets that I trust on there, like the Trust wallet, the Atomic wallet, and my number one is the Exodus wallet. That's been around for at least 6 years. And they're very friendly mobile applications. I can put them on the cell phone, and the cell phone is a couple years old, so I know it's not going to be like the latest and greatest. People are trying to attack it. My funds are there. I have the secure words, and I put my funds there, and I put them in the vault, and then I shut the vault off. So that vault, and when I turn it on, so it's a hardware device that the hackers aren't looking for. It only knows my Wi-Fi. It's only on when I want it to be on. I only use it to move coins to another device where I will transact on that device. I won't transact from my vault. So and it only knows my Wi-Fi. I could tell it to forget my Wi-Fi if I want to. I could even uninstall my wallet because I have my seed words I can come back to. I had a wallet I didn't open for 3 years. And I opened it up and said, hey, that coin's moving. Let me take a look at how much I had. Perfectly fine because I was comfortable with it. I had a laptop die on me running a masternode for the Divi project. And I felt comfortable because that masternode was running in the cloud. And I'm like, when the time comes, I'll just get another laptop and I'll set it up. And I did. 2 months later, it's perfectly fine. But if you know, like the unlocked cell phone is $150. You can throw that in your safe. So you have all these different layers of security. It's never touching the internet. It's only touching my Wi-Fi. My Wi-Fi is secure. I only have it on when I want. People aren't looking for a Samsung, Galaxy, whatever, because that's a very painful process. And if someone broke into my house, they'd have to find the cell phone in my safe, get me to unlock it, get me to turn it on, get me connected to the Wi-Fi. I'm like, good luck, good luck. So, and then once you graduate from that level of security, and you reach like a certain level of wealth, like $100,000 or more, you seek out custodians. And custodians, I tell people there's layers that we need to start thinking about. Like I would want to walk around with maybe a week's worth of money at most. I maybe want to have maybe 2 or 3 months of salary in my house at most. And after that would be my long-term wealth, and I want that a custodian that's insured and holding it there, and I can sleep well at night because if I have millions of dollars, I don't want that in my house. I would pay 1% management fee, maybe 2%, to a custodian so I can sleep well at night. And it's there, and it's secure, and it's insured. So that's the way, if you're going to be your own bank, as we adopt more people into this area, we have to increase the comfort level and the ease and understanding of adopting it and making it as simple as possible. And that's what projects like the Divi project, that I mentioned a few times, Ben likes it a lot. Their slogan is "Crypto made easy," which, as you can see, this can be very complicated.
Yeah.
I think that marketing slogan is fantastic. In fact, another project, I think it was Reef, their slogan is DeFi made easy. So they basically copied that. So it's a flattery thing. But as more people get into the space, not everybody should be their own bank, just like they don't know how to change their clocks. So you have to make it as easy as possible for them and say, if I want to be in Bitcoin, can I just write a check to somebody like I buy a stock or whatever? Make it comparable to what they already know how to do. And the people know how to use PayPal, Venmo, Zelle. That's why they take and use a QR code to look at a menu in these restaurants. Everybody's getting conditioned to QR codes. So now with QR codes, you can open up a wallet, open up an app, and just immediately be in the space. I have about 10 minutes left. I'm going to make sure I hit on everything I wanted to, and then I'll take whatever questions I have.
Can I record any of what you're talking about?
Yes.
Thank you.
Sure. I mentioned that this is actually in the magazine. I wrote an article about how El Salvador is an amazing landmark event. Does anyone know what currency does everybody know the story of El Salvador? That they're on Bitcoin now?
Yes.
Does anybody know what they used to have before they adopted Bitcoin?
No.
Dollar.
The dollar. You don't hear that in the news. Why don't you hear that in the news? Because the questions will come, right?
Yes.
Why did they move from the dollar to the Bitcoin? Is it better?
Yep.
They don't want to talk about that. So they adopted the dollar, I think it's like 2001, but they don't see all the money that we're printing more and more. They only see the inflation results. And between that and the remittances of sending money back to their home country, like we all know somebody that's here from another country is sending money back to their family. It happens all over the place. Western Union and other companies take 10 to 20%. They rip them off. But if I could take a coin and send it Litecoin or Divi or whatever other coin that's like quick to move, like Bitcoin Cash, get it there in a couple minutes for pennies, bye-bye Western Union. So that's like, and then in El Salvador, there's using the Lightning Network to make Bitcoin go faster. So one thing I want to touch on, like I mentioned that Ethereum is a platform. Polkadot and Cardano are also platforms. Platform coins make blockchains with standards that other projects can build upon. That's how they grow. So that's why there's so many new coins. We have more on the platform of Polkadot, more on the platform of Cardano, more on the platform of Theta, Zill, Solana. All these projects are coming online to compete with Ethereum. And we hear the phrase Ethereum killer because they're coming after the smart contracts and platform windows. Because they have the technology. This one's jammed up. You have projects like Matic, which has a second layer that can aggregate transactions and minimize the number of times you have to touch this network to balance that out too. All these different projects are out there. That's why all these altcoins, the important thing to know is like, is it a platform? Does it have its own blockchain? If it doesn't, what blockchain is it using? Because again, Bitcoin can't operate with its operating system. It needs its blockchain. So what blockchain is, Chainlink can operate with Ethereum. So you want to know that if you're invested in Chainlink, you're also invested in Ethereum because that's the backbone for Chainlink. You need to know what the underlying engine is. But for me, for not financial advice, but because you're recording me, but I like to look at platforms because there's 13,000 coins. I can't manage that many. I had a game that was mentioned earlier. It's called Altcoinopoly. I taught a lot of my subscribers, and the third code takes you to my website and it introduces myself a little bit more. But I taught people about 30 coins, and most of the coins that I introduced them to were platforms because if I'm in a coin like Ethereum or Cardano or Polkadot or Zilliqa or Solana or Theta, they're platform coins that give me hundreds of coins, exposure to hundreds of coins for only one. So, and Atom is another one, Cosmos. That's been going crazy. Everybody, since Solana went up incredibly, everybody's looking for the next coin that's going to be like that.
Right.
They're all platforms that compete with Ethereum. What can you do? And those platforms are also beneficial because Cardano, anything running on Ethereum, you can move this product to Cardano very easily. So you just move it. Now the smart contract has been added. That's why Cardano is now like 2 something now. It was like 3 something, but it was 50 cents in December. And that's why they're going so much. And you don't need to know all 13,000 coins, but you need to know like all these different things. Like how do you get exposure for? I don't need to learn. I don't want to learn 20 coins, or maybe I just call Jeff and find out more about them. That's what my clients do, and tell me about what these platforms are and how do I get the most exposure for the minimum number of coins and mitigate my risk that way. And that's what I work with my clients on. And then one last thing I want to touch on because I still have 5 more minutes. Let me mention NFTs. I'll explain what an NFT is. NFT is a non-fungible token. All right, non-fungible. They're like the 5 properties of money are divisible. Well, the most common ones are divisible, durable, portable. I always get this wrong. Fungible. Yes, which just means that $1 is the same as another, and it stores value for a long amount of time. That's between money and currency. Dollar doesn't obviously hold value. So Bitcoin is better than gold because it's more durable. It can last forever. It's also scarce. Scarcity is another one too.
Yeah.
So Bitcoin is more scarce than gold because it's the only asset class we can't find more of it. We know exactly how much it's ever going to be. There are other asset classes like that. Bitcoin, 21 million. Litecoin, 84 million. That's it. So we know that. You can always find more gold or silver. You can always add more coin or stock or print more money or print more currency, excuse me. Portable. Like there's an industry for hundreds of years called piracy because people had to move gold from country to country. I can send There was a record that said about 3 years ago, someone said $99 million of Litecoin in about, it was definitely under 5 minutes. It was probably like a minute or two. I would hate to be waiting for that to show up, by the way, for moving that much money in one transaction. Anyone want to guess how much? It cost under $1 to do that. $99 million under a minute and under $1.
Wow. Wow.
Yeah. I mean, that's a game changer. So that ultimate portability, and I'll also think about this one. When we eventually get to space, if we wind up colonizing the moon or moving to space, and what money works in space?
Gold.
It costs thousands of dollars to move a pound into space. Only a digital currency will work. Think about it. So a non-fungible token, to finish that story as I'm wrapping up, a non-fungible token means it's unique. It's non-fungible. It means like it's unique, like a seat at a concert or a sporting event, a piece of art. That's the most common one right now. But it could also be a deed to a property. It could be IP or a license to something. Like imagine, like, let's say you want to watch the UFC 345 this weekend, and you want to watch it, but it's a pay-per-view. Imagine a wallet inside of your television that is looking for the NFT that allows you to watch that stream. Because that's the license that you have to watch the stream. You can't watch illegal downloads anymore because you have to have the NFT in your wallet to watch that. That's some of the applications that are happening. And so a non-fungible token is a token, something that's tokenized, like there's making something digital. It's non-fungible, which means it's unique. That's all it is. So it could be that's a simple explanation. So a lot of people are talking about art right now, but there's a lot of different applications. Just let your mind wander about the possibilities, because there's all these different things of the things that are recorded that are unique, like a property deed or a license or intellectual property. All those things are very unique. So
Like baseball cards?
Baseball cards, collectibles, any kind of collectible.
So Jeff, what are your top 3 coins or 4 coins that you like?
Not financial advice.
No financial advice, but what are yours that you like? I mean, being on you, I don't
Picking
know.
3, I hate picking numbers, but I will tell you that when I did Altcoin, Boardwalk was Theta. And Theta is a project I believe in a lot, and it's the only project that has 5 patents. There are very few projects that have 1, but they have 5 patents.
What is Theta?
Theta, T-H-E-T-A, the 8th letter of the Greek alphabet.
Yeah.
Theta. They, the founders of it used to work for YouTube and a few other, like it's an online streaming service, but it's beyond that. It's adding more bandwidth. It's shared, distributed bandwidth for the internet. It's the next generation of the internet. But what must be, and I made a video on this, and I'm happy to share with it. It's on my YouTube. But the 2 of the founders have patents in VR. So they realized that the bandwidth that we have currently, the technology isn't there to support VR at home. So they're inventing it through Theta themselves. So that's where we're headed. It's going to be, and they're actually working on that unlock wallet for that UFC thing, that NFT in your TV. They're working on that. So
That's a coin.
that's a coin. Yeah, and it's actually a family, because some coins have like sister coins. They have Theta and Theta Fuel. There's going to be another coin for Theta Drop where they do NFTs. They have patents on NFTs. They have patents on DeFi. They have patents on lots of different things. So I'm basically out of time, but I am here all day. I will talk to you afterwards. I have to yield the room, but I know I could talk all day. I am here to do that. So feel free to come to me, ask me any questions afterwards. We have to give up the room to 11. So I want to thank you all for listening. It's been great. Hit me up. You have my contact information.